Good afternoon. This is Tom Alexander. This is the stock market weekend update for the week beginning Monday, July 21st. Today is Saturday, July 19th. And here's the bottom line. We go higher and higher day after day, but there are increasing cracks in the dam. I think we're close to at least some sort of short-term retracement. Let's take a look at the charts. Before I start, please, if you have not already, please subscribe to the channel. I need to get to 1,000 subscribers. I'm almost there. That would be a big help. I'd very much appreciate it. Leave comments. I'll answer all your comments, like the video, etc. So let's start with this view of the SPX. And this is the profile view of the SPX. Now, this is each profile unit here is 1/4 of trade. So we have started the third quarter now. And the second quarter was extraordinarily vertical. And I've been talking about this for weeks and weeks and weeks. As a matter of fact, if you want to go back and see what I have been saying and following the progression of this, you can go to the website. Here it is. It's alexandertrading.com. Click on weekly update. It's free. And then you can click on reports going back a couple of years at least, and you can see the progression of the analysis, and in particular, over the past couple months, the progression of this extraordinary auction that we're in off the April low. So those of you that are versed in market profile, auction market concepts, it's a great real-time lesson. You can check it out here on the website. And you can just go back week after week and see the progression. Okay, so where are we now? Well, we're continue in this extraordinary auction to the upside. Now, the third quarter has begun to become more rotational, which is something I expected to see back here. Well, it's finally starting to kick in now. So what we're looking for now is to see if we're going to trade back into this area and form more of the rotational type of market that you can see that we had in previous quarters. That is far more normal than what we have seen. I think we're about to do that. We shall see. There's other things that we can use to confirm that. Let's look at the cash indices. Okay, this is the SPX. By the way, these levels are the levels to be interested in as we start trading on Monday morning. To the upside, there is no quote unquote resistance above Friday's high, cash high. To the downside, it would be Thursday's low, and then below that is basically the week low that double bottomed against the low on the 7th of July. That's in the SPX, but we're up almost 31% since the low in April. That's like 1998, 1999 type of price action. The NDX is up almost from print high to print low, 40%. We're also in an ascending wedge, which almost always leads to a sharp move. So there are a number of things that are pointing to an imminent sharp move here. It could be up. That's why we follow price action and pay attention to price action. If it's going to be up, you got to get above Friday's high in all of the indices and start showing momentum, internal momentum, and we'll get to that in just a minute. Dow. Now, there are divergences between the indices. The SPX and NDX are far and away leading the charge higher. The other indices are lagging to one degree or another. That's a significant divergence, and it's an important divergence. New York Composite, similar. Russell, of course, similar. And all these charts you can download these charts if you go to the website, weekend updates, click on weekend updates in today's date or Monday's date. You can download a PDF that has all these levels in it if you're interested. And plus the levels are posted in that in the update. All right, here's the equal weight S&P. It's lagging. I think that's it. Okay, let's take a look at the internals. Okay, The red is the 10-day moving average of NYSE advancing issues. The green is the 5-day moving average of NYSE advancing issues. The histogram is breadth. You can see from this measure, breadth, the momentum has rolled over just extraordinarily significantly. Let's look at VIX. Now, VIX dropped a little bit on Thursday and Friday, but not a whole lot. And it's an issue if it does not begin to drop rather dramatically soon. With this much rally, it's holding up better than it should be. Okay, now one last view I want to leave you with. This is a 30-minute chart of the SPX with breadth underneath. And once again, everything is confirming a loss and a slowing of momentum here. That has to change, and it can change. It can turn around and it can be bullish, but we know what has to happen. Two things have to happen. First and foremost, price action. We follow price action. That takes precedent. That's what we trade. Secondly, internal momentum. This is an extraordinarily long streak of divergences that began back at the end of June, and has continued into Friday. Peak after peak after peak has been met with lower upside momentum internally. That's not going to continue. We're going to get some sort of clearing of the air in terms of price action with some sort of retracement deeper into the range than anything that we've seen since at least the end of May. Or it's all sunshine, rainbows, and unicorns, and we're going to expand breadth next week as these earnings come out, and it's all good, and we do a reset to the upside. So let the levels be your guide. You guys have a wonderful weekend. I'll speak with you again soon.